Just want to let you know that if you think that Brexit it takes a backseat to all of the news today, it is absolutely not. And just because it's happening on faraway shores, it absolutely has the ability to affect us here. Do you remember June 24th of 2016? What the EU and the UK news did to our markets, with Brexit still a major question mark. And yes, it hurt our markets pretty dramatically. Joining us now in the discussion is Peterson Institute President Adam Posen. Posen served a 3-year term as an external voting member for the Bank of England. Adam, on a day like this, we're down 452 points. What is it about Brexit and the problems in Italy that are affecting at least part of our markets right now?
Liz, glad to be with you on a day when there's so much news flow and so much going on. I think what we're seeing in both Brexit and Italy, and actually probably more seriously in Italy, is genuine problems that the euro area cannot overlook, and that potentially affects the Dow, the NASDAQ, because it means about investment flows, it means about a weakening of the euro against the dollar, perhaps precipitously. It means loss of value for people holding European shares. There's a lot of risk here. Brexit, as you mentioned, 2.5 years ago, the vote came. We're now coming to crunch time. If they don't have a deal with the EU by the end of the year, then in practical terms, there's not going to be a deal. It's basically all or nothing. They're either going to declare what they call a long transition, which means they abide by the EU rules, no longer have any say, which is not politically sustainable for the UK, but is economically viable. Or they go the opposite end. They pull out completely. They probably make some deals on, like, to keep the airplanes flying into Heathrow, the nuclear plants operating, but you get huge backups of trade in goods and services. You get distress over the Irish border, which suddenly reappears. You get lack of standards. You get UK having to renegotiate with all its trading partners, not just the EU. So you put all that together, there is a real shock that's going to be resolved one way or the other in the next few weeks. And then you've got Italy. Yeah. Sorry, Italy is much worse now than it was a few years ago.
Yeah, Italy is just a complete quagmire at the moment because you have this coalition government that is putting forth a budget that is way too much spending. But I do have to mention quickly that both the Dow and the S&P have now reverted to down. They're turning red for the year. So we've lost whatever gains we had. And at the moment, with the Dow off the lows of the session, believe it or not, down 401 points, it does, I know, seem odd to be talking about Italy, but let's bring it forth to our American investors here. You have Italian banks where some U.S. banks may have a little bit of exposure, but it's not that. If Italy were to turn tail and start making all kinds of noises about leaving the European Union, we've got ourselves another Brexit, or Ita-leave, as they called it, right?
No, you've put your finger on it, Liz. You're absolutely right. Things are different than they were 10 years ago. We don't have the huge interlocking between, say, U.S. money market funds and wholesale banking in Europe. So those kinds of financial tremors are more limited. But this government in Italy is very different from the last several governments, even the Berlusconi government. They're actively anti-EU. They want to challenge the EU's limits on budgets. And the kind of spending they're talking about isn't just short-term for growth. It's stuff that could potentially break the bank for many, many years. It's really irresponsible.
They don't care. They're
they
populist.
Don't care, but at some point the markets are going to make them care.
Well, we'll see. We'll see. I do have to ask you this, because President Trump, who has been really piling it on Jay Powell, the head of the Federal Reserve, whom he put into place, gave the Wall Street Journal an interview just yesterday and said, when asked what is the #1 biggest threat to the U.S. economy and the markets, of all things, he said, the Fed. What do you think happens here? You having been at the New York Fed, tell us your thoughts about this, because we are starting to see the wagon circle. You have the Dallas Fed president coming out and saying, we're fine, we should stay on path. And Mester of Cleveland saying we should continue. We don't see a recession on the horizon here.
No, and you're going to hear more of that. Tomorrow, the new vice chair for monetary policy of the Fed, Rich Clarida, is speaking at the Peterson Institute. We're going to stream it live. I hope Fox Business will be there. But, you know, and I'm sure, I'm going to ask him the question. I'm sure he'll circle the wagons, as you put it. The danger is that if there's real weakness in the economy, the Fed may be a little more reluctant, a little slower to pause or a little slower to cut rates
Right.
because they don't want to be seen as caving into the president. But basically, they can ignore him. It's Congress that the Fed worries about, not the president.
Adam?
And until Congress starts getting nasty, they can do what they think is best.